All right. Let's see. Today is November 11th, 2020. This is Professor Milligan with Wall Street Wednesday. I believe this is episode number 22. I have to check my numbers. I believe it's episode 22. So, as usual, the market just closed. Let's see, a little disparity between the actual S&P and the Dow Jones. So the Dow was down, NASDAQ was up, a couple other indexes were up. So a lot of exciting things going on. I'm going to discuss these things I'm really excited about today. I'm going to bring some things to light that you guys need to know, should have known, things I've talked about in the past. There's money to be made out there. So I definitely want to share that with you and talk about those strategies. So I'll just give it a few minutes, get people a chance to sign in and get on before I start going into it full-fledged in detail. Let's see, anything else? Earnings season. So we're going to discuss it. I'm just, like I said, I'm going to give people a minute to get on. Oh, I don't want to do that yet. And then once I get everybody on, get going here, I will. We'll go at it. Right now, I'm looking to. I'm just going through and looking through, making sure. Bear with me a second, and we're gonna get busy. Really excited. Let's see. Send that to me. Come on. What are you doing? As usual. Let's see, what am I doing? Come on. All right, typical. That's what I wanted to do. All right, so bear with me a second. Select that. Share these. And we will get started. All right. So let me do a couple things first. Let me got everything signing off at the same time because I'm not paying attention to it. Bear with me a second, and we'll get started. I just need to pull up one last thing for me. All right. First and foremost, let me find it. First and foremost, there it is. All right, let me pull this up. Christian, how are you? I appreciate all you guys showing up. So let me pull this up first. All right, what you're looking at right now is a chart on Pfizer. I had a number of emails and people called me, should I buy Pfizer? So let me tell you what my response was, and then I'll go into a little more detail. My response in terms of buying Pfizer was I would buy Pfizer as a long-term hold, not a short-term trading vehicle. A lot of people got excited about Pfizer when Pfizer came out and said that they have developed a drug that is a vaccine, that's 90% effective in terms of fighting the coronavirus. As you guys have heard me say a number of times, that the key to this economy having a comeback is the economy will come back after we have a vaccine for that virus. So this was a positive step, but let me go a step further. Which I need most of you to understand, and that is that I'm switching to a daily chart just so you can see, get a little more history. That was a weekly chart. So here's the deal. Pfizer, along with a number of other pharmaceutical companies, is trying to figure out come up with a vaccine for the COVID virus. All right. Understand this. This is not what we call a money-making drug. Any pharmaceutical company that comes up with this drug or comes up with a vaccine for this virus, two things. One, they're going to have to share it with the rest of the world. The other thing, too, is it's going to be a low-cost low-cost vaccine. In other words, they're not going to be able to charge $1,000, $2,000 or any crazy number for this vaccine. So the bottom line is, other than the, hey, job well done for Pfizer, I'm not sure how much this vaccine is going to add to Pfizer's bottom line. And that's the reason why you've been seeing the sell-offs on the stock. It popped on the news, but again, as you notice, the stock has basically pulled back since the news. So again, you're looking at a weekly chart on Pfizer. I'll go back to the daily chart, and you can see on the daily chart that Pfizer has basically, after the run-up, has basically pulled back. I believe the run-up it ran up to 41, 42. The other thing that's interesting about this, one of the senior executives at Pfizer, now don't get me wrong, he had put in to sell his stock. He had filed all this paperwork to sell some of his stock in the position, and he did sell it. He happened to get out at the high at 41 the same day that the news was announced. Now, I don't think it's inside information because, again, the gentleman did have to fill out the paperwork, so this process had been going on for almost 90 days with him. But the bottom line is that this drug, the vaccine they're coming out with is not good, again, going to be a high money-making drug for them. It will probably add a little bit to the bottom line, but understand they're going to have to give this vaccine away. They have to give it to the rest of the world. So there is no proprietary, there is no patent on this particular way they can actually benefit from it. In that respect, that's why you see the stock pull back. Now, the other thing that I had a question on, and let me go find that chart. Bear with me a second while I dig it up. And I know I have it for you guys. As soon as I find it, there it is. It is right here. Now, what you're looking at is Rocket Mortgage. Now, I picked on Rocket Mortgage for a reason. I had somebody email me and ask me about Rocket Mortgage. So let me back up. I had mentioned to you guys a long time ago, and I'll say it again, that one of your keys to actually becoming a very good stock picker is your ability to actually go into the newspaper, read the headlines, and do some forward looking. Now, one of the reasons why I bring it up is several weeks ago, actually a couple of months ago, I had mentioned to you that the mortgage interest rates, the rate on mortgages, are at an all-time low. This is the lowest it's ever been. We've also seen, believe it or not, a jump in housing in terms of housing buying. So you have low interest rates. You have a market out there where more and more consumers are actually buying homes because of the low rate and because a lot of consumers now want to move out of the city and move into bigger homes since they're working from home. So the housing market's actually done extremely well. I bring this up to say is that it is actually probably a very good time, which I mentioned then, to start looking at companies that will benefit from these lower interest rates and benefit from this housing starts. Now, Rocket Mortgage is one of those companies that should benefit from it. All right, but here's my challenge, as you guys know. One, I only buy stocks that are trading near their all-time high. All right, that's the first thing. Two, as you can see, Rocket Mortgage went public back in September, August. Went back into public in August. Looks like that first day of trading, stock got as high as a little over 22. And the second day, the stock went to 26 and change, 27. Then it pulled back, ran to 34, and from 34, it's done nothing but basically gone back down. So what am I saying? One, I think Rocket Mortgage will do well in this environment. Two, I'm not buying anything or looking at Rocket Mortgage until it goes through that old high up there at 34. So there's a lot of workings you can see in here. Let's see, I think I did it. I think I did. Yes, I did. Now the question is, where is it? There it is. So what you're looking at now is a weekly chart of Rocket Mortgage. As some of you know, I look at a weekly chart because it takes out the volatility. As you can see on this weekly chart, that after the stock ran up to 34, it's done nothing but pull back and it's been in a trading range between 18 and 24. So first and foremost, I wouldn't jump on Rocket Mortgage till it pushes through that 24 and challenges at 34. For those who like to trade, if the stock comes down here to 18, I'd probably buy it here with a stop below 18, somewhere in that range. And when the stock ran up to 24, I'd probably sell it, take some profit, and go short. If I'm short the stock at 24, I would put a buy loss on it probably around 25, 26. And it breaks through. Most likely I'd do it closer to 26. That's within 10%. But I would trade the stock that way if you're a trader. Again, I think when the stock moves through 34, and I think it will challenge 34 if the market holds up. Two, interest rates down here, which I don't see the rates coming up anytime soon. So I do expect this to challenge 34. It really is the only pure play in the mortgage industry. There's a few other companies, but again, your biggest mortgage issuers are Wells Fargo and the banks. But again, they're not pure plays. This is a pure play. So that's what I would expect. The other thing too is that earnings are due out soon, so just keep an eye out for that. All right, so you got that. All right, so I wanted to talk about, again, Rocket Mortgage, which I just did, and I also wanted to talk about Pfizer. Now I'm going to jump a little bit. And what I'm jumping to is, as soon as I find it, of course I never can find it whenever I want it. So, I'm going to pull that up. Earlier this week, or maybe it was last week, I posted this and I said, why? Now, I'm excited. Let me explain to you why. I believe that in order to become a great stock picker, you need to understand the whys. Why the stock go up? Why the stock go down? It's the whys. Now, you got to dig a little deeper. Of course, the stock went up because you have more buyers than sellers. The stock went down because you have more sellers than buyers. That's not enough. You got to go deeper. So one of the things I also posted was, what is a catalyst? And the reason why I posted this one today with why is because a catalyst might be the reason why the stock ran in the first place, why the stock's moving up, why the stock's moving down. A catalyst is an event that a corporate event could be internal or external, which means it could be directly inside the corporation or it could be outside the corporation in terms of what's going on in the marketplace. But a catalyst is an event that happens, we don't know when or where, but an event that happens that could propel the stock to another level. An example, real quick off the top of my head, of a catalyst, and I'm looking, bear with me a second. An example of a catalyst that you might recognize and see is right now. We're in earnings season. Earnings are a catalyst. That's the reason why you guys are trading earnings. If the company beats earnings, which is what you're looking for, then you want to get long the stock and the stock's going high because it beat earnings. If it missed the earnings estimate, stock is going lower. Those are catalysts. All right, I'm going to go through more, but that's an example of a catalyst. Bear with me 1 second. So let me put this up for you guys. Where are you at? You should be there. Why are you not there? All right, let me look for it again. And it's not there. Of course it's not there because that's what I want. All right. I posted it on I've already posted it, so let me read it to you. I thought I had the picture here. I don't have the picture here. So let me come out. There's no reason to have that there. So one of the things I posted for you guys to look at is a nice little diagram that shows different types of catalysts. All right. These catalysts can be internal and these catalysts can be external. So let me read down some of these catalysts and then explain what they are. So let's start with the obvious, which we already talked about, earnings surprise. Corporations are valued based upon their earnings. When they beat those earnings estimates, Wall Street believes the stock price is going to go higher because the corporation now is valued more because the corporation is making more. That's an example of a catalyst. Some more catalysts. Stock split. On this same call, I've had people ask me, Professor Milligan, what should we do with Apple? They announced a stock split. A stock split is, believe it or not, a catalyst. I mentioned to you that there's a theory behind stock splits called the stock split accumulation, that when a stock splits, it's going to run back to its old high, the pre-split high. And again, if you remember, stocks only split when they're doing really well and going higher. You don't see a stock split when stocks are going down. Let me name some other ones. Share repurchase. One of the reasons why we saw the bull run that we saw over the last 4 years is that when President Trump put in that tax reform for corporate America took that extra cash and started buying back their stock. Real simple. More buyers and sellers buying back the stock. The other thing which we talked about is that when that stock came down in weakness, that's when corporations stepped in and brought their own stock. The other reason why corporations buy their own stock is they believe that their stock is cheap. They think that their stock is the best value. So they'll buy it, they'll put it on their books as treasury stock, and then they'll use that. As I had talked about, Apple and a number of tech stocks use their own use their own stock to buy other companies. So let's give an example. If Apple brought back stock at $100 a share and then Apple's trading at 50, when they use that stock to acquire another company, they're going to mark that stock at market value. Not that they paid $100 for it when they brought it back, but at market value, which is $150. All right, let me name some other ones. Dividend policy. Corporations increase their dividend. The reason why they increase their dividend means they have more cash flow. Things are going well. These are all catalysts that I'm naming that can drive a stock price. I'm going to name some more. New management. We've seen that a number of times. When an executive steps in that has a proven track record of success, moves into another company, new management. Again, another catalyst. Let's see what else. I did stock repurchase. I did dividends, earnings surprise. Here's the one that got me started when I started the business umpteen years ago, and that was takeovers. I was looking at a lot of 13D filings, looking at takeovers. That, as you guys know, that also drives stock price. One that we haven't mentioned, which is on here. And by the way, again, this list is on. I did post it earlier. For some reason, it's not showing up in my photo, so I can't add it. I'll post it up here. But again, I did post it on Instagram earlier. Another one is what we call new institutional sponsorship. That one's big. You take a small company, I mean, think about it. You guys have seen this in your life. You take a small company doing extremely well, but there's no sponsorship behind it. In other words, people aren't talking about it. Wall Street doesn't see it. Now, we had mentioned this, and I'll continue to mention this. Institutions drive stock price. Institutions are the one that go and buy in big bulk. When they buy a couple 100,000 shares, 200,000 shares, million shares, they start to move stock price when you're buying in that type of volume. Well, you take a corporation that's publicly traded that has very little institutional sponsorship, which means institutions aren't really tracking it yet. As these institutions start to buy the stock and start to track it, the stock price will go higher. So one of the things you want to look at is new institutional sponsorship. These are all things that you can track. Along with new institutional sponsorship also comes analysts, when analysts start covering it. You'll see that a lot in the IPO market. You'll see that a lot with the small cap stocks, that once Wall Street starts to cover them, they put a buy recommendation on it, then they start sending it out to institutional investors, and they basically they build a marketing plan behind it. They put the hype in there. Hopefully the company can live up to the hype, and that's what drives stock price. What else? Name a couple others. Now, the other ones are internal. So what do I mean by that? Internal means that the corporation's running more efficiently. They figured out ways to cut costs, lower inventory, cut costs. A big one when it comes to internal is a new product or service. Think about this. What drove Apple? It was actually the Nano. The Nano led to the iPod. The iPod led to the iPad. The iPad led to the iPhone. Again, that was a new product or service. What drove Google? It was easy. It was their search engine, and they've been adding new products since. So one of the things you want to look at is new product or service can drive. Just recently, who am I going to talk about? Well, I'm going to leave that alone in terms of new product, new service, but you guys get it. Increased pricing power, the ability to raise the price on their particular product. You're seeing that with Tesla. Tesla has tremendous pricing power on their electric vehicles. Improved business, improved balance sheet. These are all things, these are all catalysts that can drive the stock price. I want to make sure you guys understand this. These are the whys. So when you see a stock running up in price, first thing you got to ask yourself is, why is it running? What's driving this? Break it down. After you break down the why, the next question is, what's the duration behind this? Is this a short-term duration, or could this catalyst last for a long time, a year, 2 years, 3 years? Now, we already know this, but I'll give you a prime example. The Nano, which was Apple, that new product or service lasted and still going strong. So we're 15, 16 years into it, and it's still going strong. Same thing with Google. Same thing with Amazon. Those products and services changed the way that we handled things. It changed the way that we did business, changed the way that that product or service was looked at. All right? Those are huge catalysts. These are the things that we look at. This is the reason why I say to you guys all the time, understand why your stock went up. Understand why your stock went down. Now, let me go another direction. I'm going back some years. I'm going back to when I was a much younger man, literally working at 14 Wall, in my office at 14 Wall Street. I'm sitting there, and my office partner says to me, Eastman Kodak is done. I said, really? Why is Eastman Kodak done? He said, well, it's not going to happen overnight, but it's going to get done. I said, what happened? He said, they've invented a digital camera. And they're working on the technology that the digital camera will actually be able to take fast photos, just like you do with film. And he said, once that's done, there's no reason to actually buy a camera that shoots film anymore. Everyone's going to move towards digital. A catalyst can not only drive one company, it can put another company out of business. Another example of a catalyst. And again, I know I'm beating this up a little bit, but make sure you understand, we can go a lot deeper. A lot of you guys are playing the video games, electronic arts. All right? I want you to think for a minute, and most of you guys know this. Several years back, you were going to GameStop to buy your games. All right? You were buying the DVDs. You would then take your old DVDs, trade them in, and get new ones. A few years back, Electronic Arts, as well as several other companies within the tech industry, started going to streaming. So Electronic Arts said, we're no longer going to make DVDs. We're going to stream this to you. You're going to sign up for a subscription, which one, it did a couple things. It smoothed out their cash flow. And two is, it eliminated one of their major expenses of having to make DVDs. And now they stream everything directly to you. We saw the same thing with Microsoft. Microsoft went to a subscription base and they stream everything to you. They no longer make DVDs. That new technology drove Electronic Arts, Microsoft, and several other companies to all-time highs. At the same time, that catalyst, and that's what it was that drove those stock prices, at the same time, put GameStop in trouble. So a catalyst can work for you, a catalyst can work against you. So anyone that actually understands and looks at this understands that Electronic Arts, Microsoft, Adobe, a couple other companies that did this and went to that full subscription agreement, their stock price dramatically ran for two reasons. One, it smoothed out the revenue stream. Two, it increased the revenue stream. And three, it lowered costs. They no longer had to either manufacture those DVDs or outsource it, which was a cost. It improved their margins. That's what we look for with a catalyst. When you understand the whys, you can then look at other places where the whys will have effect. All right, I think I beat up this whole thing about catalysts enough. I'm quite sure some questions will come and I hope they do. But again, guys, always look for your catalyst. Now, one of the catalysts that I look at and I use is initial public offerings, IPO market. I'm about to share some IPOs with you, so bear with me a second while I actually pull up the ones I want to pull up. So let me find them first. Excuse me. So I'm going to go to the ones that I actually own. So bear with me a second while I actually find them. And again, I did post all these charts. I didn't post all of them, but I posted most of my charts. All right, come on, where you at? All right, here it is. There it is. So I know what it looks like now. Bear with me a second. Let me find this chart for you. And once I find it, there it is. All right. What you're looking at is Plantair. I hope I'm pronouncing that right. Symbol PLTR. Stock went public back in October. Stock went public, and if you look at this chart, the first day the stock ran up to $11 and change. That was the high the first week. Then it pulled back and did some consolidating. Now, I guess it was about a week and a half ago, I started getting some emails and some other things about people are saying that they're going to go long the stock now. They like it. Great company. I did some research on it. Everything's there. And my comment to them was, again, I buy stocks as they go through their all-time high, especially IPOs. So this stock was purchased on the move through $11.32. It moved that day. All right. And you can see when it moved through $11.32, it ran from $11.32 up to $16 a share and basically in 3 days. Now, it's pulled back, done some consolidating here at 15. They're due to report earnings, I believe it's tomorrow at 2 cents. But you can see how the stock has run. So again, on the breakout through $11.32 to where it's actually at 16, where it's at now, you actually had a 50% move all cash. You had a 100% move on the stock if you were on margin. This is how I trade the IPO market. Most of the people on this call, you including me, could not get IPO stock, deal stock. All right? We couldn't get it. So how do we play an IPO? This is how we play it. Now, next to it, the other thing I did was, and let me find this one. I'm going to put up, if I can find it. Well, I can't, I'm not going to spend too much time looking for it. All right. United Software. This is another company, another IPO. Stock went public again back in September. The first day it went up to, looks like about 75, 76, pulled back. And then the third day the stock ran to about $85 a share. And that is when yours truly got in. I got in around $85 a share. Some of you have heard me mention this on the call several times. I have mentioned it in the past. The reason why I mention it is this is another IPO. Now, I own the stock. I'm still long the stock. It's backing and filling a little bit. If I can find it, which I'm looking for right now. Bear with me a second. I got to find it because it does make a difference. There it is. All right. So I did find it. Question is, where is it? And I believe there it is. What you're looking at now is a weekly chart of United. What I do a lot is I'll switch to a weekly chart because a weekly chart doesn't show all the volatility. A daily chart shows volatility. The more data you have, the more frequent the data, the more volatility you're going to see. So I switched to a weekly chart just so you can see that, again, it's in an upward trend. Even now with the pullback, we have higher lows and higher highs. This is typically an uptrend. Now, because I own it at such a great price, I'm allowing the stock more leeway, which means that if it pulls back by 10% or a little more than 10%, which it did, I'm not going to sell it. When I brought the stock at 85, 10% was my number. Now, when the stock has actually moved like it has, I'll give it more leeway. Now, with that said, I've always told you, I do not sell stock at the all-time high. If you ever get out at the high, it's more luck than anything else. I'm the same way. So I don't expect to get out at the high. I think there's something here. Again, for those who know it, it's a gaming stock, very popular with the gamers, turns games into 2D and 3D platform. So again, I'm not digging into it, but I just want you to understand what's going on here. Now, the other chart I wanted to show you, which I gave you guys, and again, I'm just looking for it. And I brought this one, I'm bringing this one up for a reason. Here it is. So let me find it for you guys. And well, let me do these two first. Again, you're looking at another IPO. And again, if you look, bear with me a second, I'm looking for the same chart. Nope, that's not it. Of course, I won't be able to find it. Of course, that's the way things work. I won't find it, of course. I'm just looking to, I'm looking for the name. I don't see it. The symbol's ALGM, so I don't remember what the actual name is. I did not buy this one, but I do want you to take a look at it. So here's a deal. Stock was priced. First day, looks like the stock ran as high as $19 a share, backed and filled the next day. And then the third day, stock went through $19, and that's where you would actually buy it. And as you can see, the stock ran from 19 to about 26. And what was that? In 6 trading days? 5 trading days a week? Again, not a bad move. Not a bad move. On this one, I would have used the 10% stop only because the move was not enough. There's not enough fat in here for me. So this one, where you take your quick profit. If you sell this at 20, at 25, 24, take your profit and move on. If you're still here at 21, you probably could, not sure, but that's what I would do. The other one I'm looking at has to be right next to it. And again, I don't know. Symbols MAX, another one. Went public, ran to $32 a share. The second day, it actually ran up to $37 a share. It took a couple of days, like almost a week. Then it finally broke through that $37 a share. And when it broke through that $37 a share, it ran all the way up to over 52. And now it's backing and filling. This is what you can get from the IPO market. You guys are all studying the IPO market and looking to get in on the IPO level, and you're leaving a bunch of money on the table. The easy money is the IPO stock. I've used it, I've traded them, but the easy money, the IPO stock for most of us is a problem because we can't get deal stock. And the thing I'm going to tell you guys is, unless you're a institutional trader, I've got a couple on this call. They might be able to get deal stock, but you and I as retail investors are not getting deal stock. If we do get any deal stock, in most cases, we don't want it. If the fact that if Goldman Sachs or Morgan Stanley is showing you and I deal stock, most likely we don't want it. Deal's probably no good. All right, now, these are IPOs. These are IPOs that were hot and continue to stay hot. Now, I got to bring up I got to show you this too, because we're dealing with IPO stock. And let me just find one. Bear with me a second. I'm looking for it. There it is. Okay, I got it. All right. So now, as I explain this to you guys, just follow me as soon as I find it. There it is. Now, early in the conversation, and by the way, this is a weekly chart. The reason why I went to a weekly, because it goes way back. I can switch it to a daily, but you'll get the idea. This is a weekly chart. This stock is Lemonade. Lemonade does insurance, all right? Online insurance. Basically, homeowners insurance at that. Another stock to maybe take a look at when, believe it or not, the housing market takes off, the mortgage market. But anyway, Lemonade came public. Stock ran to almost $100 a share within the first 2 days of trading. Hot IPO. Since Lemonade went public, as you can see after the first 2 days, and this is what you learned from me, and the reason why I'm bringing this up because it shows up again. Company's doing well, but the stock got ahead of itself. And if you look now, anybody that brought Lemonade the first or second day and held on is probably kicking themselves. Because what's happened is, and again, under my strategy, my philosophy is, I wouldn't touch Lemonade again until it goes through that $95, $96 range. I have it on my screen to alert me. As you can see now, the number of investors that jumped in the first 2 days, and look at the volume. And now look at the stock. What's happened is the stock had got way ahead of itself. Great company, good numbers, good earnings, so forth, so on, new technology and insurance. But the bottom line is, guess what? There's no follow through right now. So you can actually try and trade the stock. You can look at trading it. But again, you're looking at a weekly chart. When the stock moves through the 95 range is when I would be a buyer. All right. Now, there's one other one I'm looking for. And when I bring this one up, you guys will really understand. All right, I found it. I know what it looks like. Now I just got to find it. And when I mention the name, you all will know the company. I've talked about it before when I talked about IPOs, and I'm talking about it again. And this is Snowflake. As you guys know, Snowflake was priced. Stock crushed it the first day. Stock ran as high as $320. All right, that's how high it was. Look at the volume. Now, here's what I'm going to say to you. I've been through this before. Facebook, Snapchat, Alibaba. I'm just naming ones that come to my head. God, I'm bad with names. I'm great with symbols. So here's the deal. There's no question that the market wanted this company. There's no question there was much anticipation about it. There's no question the stock ran. But think about this. All these investors who brought the stock when it actually on the IPO level. And look, the stock pulled back. And this was basically September. Then you'll see near late October, the stock tried to make a run and pushed back up through the $300 level. And then what did it do? It failed and came right back down. All right. Again, you're looking at a daily chart on Snowflake. So the reason why I mention this is I've heard a lot of people I'm buying Snowflake, trading Snowflake. You can trade it all you want. For me, when Snowflake pushes through $320 a share, I'll be a buyer. Until it pushes through $320, guess what? All you guys who want to buy and trade the stock, guess who's sitting there hanging above your head? All these investors that brought the stock at $300 and $320 in that range the first day, and then finally saw it in the end of October start to run again and say, okay, here it is, it's about to push through, and guess what? It didn't. It failed. They're all sitting there with stock on their head. And you all have heard them say this statement. They'll buy a stock. I'm not picking on anybody. They'll buy a stock. They'll sit in that stock, and they'll say, I'm just waiting for it to get back to what I paid for it. I don't want to take the loss. And once it gets back to what I paid for it, I'm going to sell the stock. It's the worst thing in the world to do. Two things. One, you wrote it all the way down. If you wrote it all the way down, you might as well write it all the way back up and then give it some. All right? For me, I'm not buying a stock like this yet. I'm going to let them clear all that fast money out. All those people that are saying, I'm just going to wait till it gets back to what I paid for it, then I'm going to get out. I'll wait for them to clear all that out. And then once it does, the stock will take off. And if you think that doesn't happen, Alibaba, which I had talked about. I mean, your Palantir, look what happened here. Your Palantir ran to 11, traded sideways, finally pushed through. This is what IPOs do. The hot ones. They can get ahead of themselves. And when they get ahead of themselves, give them time to come back. And once they come back, that's when you look to buy it. Don't rush into it. Now I'm looking, well, since I'm here, let me check my time first. Okay, I got enough time to do this. I did not put these charts up there. Another insurance company, Root, Hot IPO, if I remember correctly, which I'm going off the top of my head, I believe Root was priced at $22 a share. Stock opened up at 26, ran to $29 a share. All right. First day. Second day, could not attack that 29. So for me, 29 was my number. If the stock got through 29 and change, I was going to be all over it. Now look what it did. The stock traded back, and guess what it did? It came back and actually, on the third day of trading, touched and broke the 22, where it was priced at. Right now, it's starting at $22.84. So, this is Milligan. One, if this stock breaks the offering price of 22, I'm going to get short. First thing. Second thing, if it doesn't break that and it starts to run through that 29 number, I'll look to buy it at 29. Same logic behind this. There's a number of investors sitting out there that own the stock. That was a hot IPO. Great story behind it. They got into it. They brought it near the high, and the stock's done nothing but trade sideways and go down since. And again, it's still sitting there overhead. I like to call this, there's a cliff. There's a little ledge hanging over their head. And that ledge is what stops them from going higher. And as soon as they get to that ledge, most of them are going to want to quit. So once they climb back up to that ledge, most of these investors are going to want to quit. Don't quit. Actually, you shouldn't even be in there. Let them push it through the ledge. Let them push it through that all-time high. And when they do, jump on it. Again, when it does, I wouldn't be surprised to see a 10%, easily a 10% move the first day when it finally does go through that number. All right. I feel like I've done enough on these charts. So I will pick up, well, next week I will give you some more examples of some IPOs that didn't work. In other words, they were hot IPOs that failed. How do you make money on those? What do you do? And there's a number of them that actually have failed. One of the things I had mentioned before is that people said, if the market has a sell-off and a correction, a major sell-off, what would I get short? Well, again, one of the things I told you was I would look at the IPO markets and look at some of the stocks that have failed and have not handled the IPO process. If they couldn't handle the IPO process and hold the price of the stock, then you're not going to hold it in a bad market. And I got to pull it up. I'm just looking for the actual, which chart it is. And the reason why I'm pulling up, I promise you this is my last one, but as I talk to you about it, I want to pull this one up. So let me see let me find it first. I believe that's it. Yep. So again, now, this was McAfee. McAfee was priced, I believe, at $20 or $21, $22 a share. But it was an IPO. We all know the software. We've all had it on our phones, on our, McAfee software, antivirus software. We all know the company. Reason why I'm laughing is you can see the stock never made it to its IPO high offering price of $20 a share. And you can see it traded sideways, never got there. And you can see that the underwriters tried to hold it up, and eventually the underwriters stepped away. And when they stepped away, the stock went from $18.30, 50 cents, it looks like, on a 5-day, 6-day sell-off all the way down to the $15.50 level. So there's a lot of work here in terms of that. Why am I showing you this? This was one that I would have tried to get short. Well, not would have. I tried to get short. Couldn't find any stock to borrow, and there's no option on it yet. But this stock has definitely broken down. And again, it's one of the things I mentioned to you guys. When these hot IPOs, when they break down, especially the first week or so, there's nothing there to catch them. And again, this deal was priced below the offering. The offering price was below the range. Investors did not seem to want it. And you can see right now that the stock is in trouble and going down from there. All right. that was my last one. I promise you on that for today. So right now, let's see. I've got about 14 minutes. If there's any questions, now's the time to hit me up with the questions. If not, before I forget, you guys are also hearing a lot of noise out there about that if we have a Democratic president, the market's not going to do well, and now the Republican president's always better for the for business. All that might be true, but I'm going to say one thing to you. In fact, it's not true. The stock market has done better under Democratic presidents than they have Republican presidents. That's first thing. First thing I'm going to say. So I don't buy into the fact that this market's not going to do well. The second thing is, again, which I had mentioned, my belief is that the key to our recovery in our economy and this market staying strong is going to be a vaccine for the coronavirus, which it seems that we do have, which means that if and when that virus finally does take effect, get out into the public's hands where we all can be vaccinated, that there should be some return to quote unquote normal, which means that the airline stock should do well. The airlines should start to come back and other industries should start to come back. So that's what I expect. Now, the other thing I'm going to say to you is this, and again, I'm not picking on my presidents at all, but every recession we've had in my lifetime has been a Republican president in office. So just a little food for thought. Again, I do not believe that that a Democratic president's going to force us into a recession. I do not believe that the market's going to go that way. I don't see that. And the other thing I would say is be forward-looking. Now, I'm about to wrap up, but again, why? Why does stock go up? Why does stock go down? What's driving the price? Don't come back with more buyers and sellers. That's rudimentary. I expect that from a high school kid who's trying to figure out how to invest in the stock market. That's not what we're doing. Dig deeper. When you understand the whys, you'll look for more whys. In other words, if I'm thoroughly convinced I've come up with a strategy that every time there's a stock buyback that the stock's going higher, then what I'm going to do is my why, that's my why, I'm going to go look for more stock buybacks. All right? It's just that simple. And by the way, there are some corporations out there that generate a ton of cash and they take all that cash and they buy back stock. Now, I'm not sure if anybody started buying back stock yet because of what's going on with the pandemic, but those are catalysts. Those are things. So ask yourself, why? Why? Start learning the whys. Any of my former students will tell you that I'm always asking them why. It's a big question. Professor Milligan, such and such went up. Why? Why'd it go up? Professor Milligan, I made money in this. Why? Why'd it go up? What happened? Tell me the whys. I think the stock's a $100 stock, Professor Milligan. Why? What are you seeing? When you start handling the whys, you're going to do really well. And understand, earnings play is a why. Earnings play is a why. So if you're playing earnings, that's a why. If you're playing stock splits, that's a why. All right? Those are you've narrowed down the whys for yourself because if that's the things you're looking for in your stocks, that's your why. All right? Fine tune, hone your whys. I'm sitting here smiling because once you get this, it basically, it's going to be phenomenal for you. You're going to make a ton of money once you understand the whys. All right. And like I said, next week I'll pick up more on this IPO strategy. I'll talk a little bit more about it. We dealt with the hot stocks. There's cold ones, long, short, what to do with these things. There's money to be made. As I showed you, there's money to be made. I'm living proof of just recently between Plantier, between United Software. What else? There's a couple of them I traded. I traded Frog, which we talked about on here, J Frog. So that's what's going on. All right. Love you guys. Appreciate you. And I got 9 more minutes. So if there's any questions, there we go. Somebody just turned in and asked me, what's the why? Sorry about this. I can't explain the why in 5, 10, 9 minutes, but I can say this. The why is for you to explain. The why is why the stock go up? Why the stock go down? What's driving it? If you look at the photos and watch this on IGTV, I discussed the whys in great detail. I just don't have the time to answer the why. Sorry about that. It's not a 5-minute question. But the good news is, you got 24 shares of PLR or PLTR? PLR. I'm not sure what this PLR is. I'm gonna take a look at it. I think that's what I think you're saying PLR. Maybe you're not. But I don't have my charts up. I'll take a look at it. I'm writing it down now. I'll take a look at PLR. What am I going to say? All right. Any other questions? PLR came up. The Y just came up. I'm just double checking. I'm going through and see if I've missed any questions. I don't see any questions. Let's see. All right. I don't see any more questions. Oh, yeah. All right. So, David, you have PLTR. PLTR. So you have the same stock. Earnings are due out. I believe earnings are due out tomorrow. I think they're looking, if I remember correctly, they're looking for 2 cents. Earnings are due out tomorrow. Stock ran ahead of the earnings. It broke out. Good move. I think you'll make some money on that. All right. Any other questions? And again, we're still in earnings season, guys. Maybe now you'll see some follow through on some of these stocks. Now, as you guys know, there was no follow through on the Dow. There was only follow through in NASDAQ and the S&P today. But again, the markets won't stay separated. I have looked into pharmaceuticals. Deal is this, and I've said this before, David, and that is, I don't invest in anything I don't have an understanding on. So I haven't really done much in pharmaceuticals over my lifetime, just because I truly don't understand them. The other thing that I didn't like about the pharmaceuticals is that my whole profit margin, whether I made money or lost money, was based upon news releases, press releases on new drugs. If they got the drug approved, didn't get it approved. And I actually found that too volatile. I haven't, for me, that just didn't work. I've looked at some of them. There's some of them in trading. In fact, was it SDRG? Or is it SDGR? SDGR. Came public about less than a year ago. The Gates family, Bill Gates and Melinda, have their trust has a big stake in there. Stock came public, ran to 100. I actually traded that one. It's pulled back since then. So I have traded them. I'm just not a big fan of them. I can take a look for you at certain ones. In fact, I'm writing down. But I have not been trading them just for that reason. In my young career, I got caught on the wrong side of some of these pharmaceuticals when they didn't get approval. They didn't get FDA approval. And those were some of the most painful losses for me. And there was no way I could have avoided that because I was sitting there waiting for the news. And the news just didn't come out in my favor. So I basically shied away from them from that point. Doesn't mean that you guys can't make money on them. In fact, I have a number of friends that made a bunch of money. I mean, retirement type money off of Amgen. I remember when Amgen first came public. So again, I have a bunch of friends that basically, built their retirement account off of Amgen. So what you lead me to say, David, is this: that know what works for you and what doesn't work for you. Know what you're comfortable with and what you're not comfortable with. If you can't sleep at night, then you shouldn't do that trade or shouldn't be in that position. For me, that was pharmaceuticals. I'm just not comfortable with them. I will look at it though for you. All right. I'm about to hop. The reason why I'm going to hop is I do not want Instagram to end this, because if Instagram ends this, I will not be able to post this recording on IGTV. So I'm going to end this right now. Again, I do appreciate you guys. Have a profitable week. Make some money. And by the way, if some IPOs come out that you're tracking or you don't see, or you have some question on it, feel free to hit me up. I have a whole strategy that I developed over the last 30 years of trading IPOs, And I know that a number of my former students who are on this call actually have used that strategy and it's worked well for them. All right. Have a blessed one. And I will see you guys next Wednesday on Wall Street Wednesday with Professor Milligan. Blessings.